My name is Heather Bowyer, and I'm a senior analyst with the Canada Mortgage and Housing Corporation. Today, I'm going to talk about some of the housing market activity and conditions that we're seeing in the Manitoba and Winnipeg markets. We'll start by discussing some of the economic and demographic trends. So looking at our Manitoba overview, the COVID-19 pandemic is causing unprecedented social and economic impacts, and this will likely translate into housing market impacts as well. However, it's subject to a high degree of uncertainty as the pandemic and its effects are unknown, and as well the end of the pandemic is unknown. We'll expect to see significant declines in employment and immigration levels in Winnipeg, and Manitoba, which will translate into impacts on the housing market. We see employment and immigration levels as fundamental drivers, so this will likely impact housing demand going forwards. However, in Manitoba, as we're not seeing the same impact on the decline in oil prices, it's likely that there'll be a bit of a smaller impact than in other prairie provinces such as Alberta and Saskatchewan, who are facing that double effect from the oil prices as well as the pandemic. So looking at the Winnipeg CMA population growth has been slowing since 2017, and the primary driver of this has been increases in population flows to another province. So when oil prices were depressing in 2016 and 2017, we saw less individuals leave to another province, which helped to boost population growth. However, as these prairie provinces recovered with the uptick in oil prices, we again started to see those migration flows. International immigration is a large proportion of employment of population growth, and we've seen steady international immigration levels in Winnipeg throughout the last several years. However, going forwards, it's unclear necessarily what the impact of COVID-19 will have on population growth. Border closures and travel restrictions will likely impact the number of new immigrants coming to Winnipeg. However, we may see, more individuals choosing to stay in Winnipeg rather than relocate to another province until the pandemic is more under control. Looking at population growth rates in Winnipeg and in other large centers in Manitoba, we see for the most part, smaller population centers don't have the same growth as we see in Winnipeg. Winkler being the exception, where we've seen, strong population growth in Winkler over the last several years. And part of this is coming from families looking to relocate out of the city. We see, cheaper house prices in Winkler, and Winkler's been getting more amenities over the last several years, which has made it a more attractive place to live. In Thompson, in the northern region, we've seen more challenges in this area over the last several years. Areas in the north tend to be more resource dependent, and we've seen some mining challenges and layoffs in Thompson, which have contributed a bit to that slowdown in population growth as individuals leave the area to find more work. Looking at the Winnipeg Age Profile, we can see that the largest age group would be comprised of our population aged 35 to 54, combined with the 0 to 14-year-old age groups. So these would be our family populations, and they would tend to create demand in that single-detached housing side, so whether it be on the resale market or the new home market. And in Winnipeg, on the resale market, the single-detached makes up the largest proportion of sales, and this is coming from that large population cohort that we see for this group. Like Winnipeg and many other areas in Canada, we are seeing population aging, which will impact housing demand going forwards if seniors choose to, age in place, downsize, choose rental. There's many different options. So we would see this translate into a shift of housing demand as well. Looking at the Winnipeg CMA employment growth, we can see that the first impacts of the COVID-19 pandemic are starting to occur with those large employment contractions in the 2022 Q2 and Q3. So we saw that as of April 1st in Manitoba, I believe, a lot of the non-essential businesses were forced to close. However, many chose to close before that, which is contributing to that slowdown in employment growth. Among age groups, the population aged 15 to 24 fell 7.8% in the third quarter, largely a drop in full-time employment for this group, and also the group most affected by the COVID-19 pandemic. We did see increases in part-time positions of this age group, and this could be in part attributed to the need for more essential workers. So think grocery store clerks and that kind of thing that could be contributing to the boost in part-time employment for this group. If we look at on a seasonally adjusted basis, there were just over 17,000 less people employed in September compared to the pre-pandemic levels in February, which is a decrease of 3.8%. So significant employment losses caused from the pandemic. Looking at Winnipeg CMA employment by industry, the COVID-19 pandemic has had a widespread impact. However, some industries have been more affected than others. We saw in the third quarter of 2020, the goods producing sector had a larger decline than the services producing sector. And this was in part from that large employment contraction in the forestry, fishing, mining, quarrying, and oil and gas industry, in part from the decline in oil prices that we've seen. However, the construction industry did face some decreases in employment as well, and this is in part from a slowdown in new housing construction that we've seen. In the services industry, there's been some industries that have been more affected by the impact by the pandemic than others. So think the accommodation and food service industry, which most restaurants had to close down, as well as transportation and warehousing. Less demand for flights and those kind of things contributed to a slowdown in employment growth in that industry. We did see some increases over the last quarter as the professional and technical services as well as the healthcare and social assistance industries posted gains, and this is in part from extra demand needed from the COVID-19 pandemic. Looking at the Winnipeg CMA unemployment rate, we can see significant growth in the unemployment rate in the second and third quarter of 2020. And given the magnitude of the economic shutdowns and the widespread impact, the unemployment rate is larger than what we saw in the recession in 2008, 2009, which was more concentrated in one sector. In the third quarter of 2020, the unemployment rate was 9.9%, and the highest unemployment rate occurred in that 15 to 24-year-old age group at 19.4%. We've seen a large unprecedented change in the number of unemployed individuals over the last several months, which has contributed to that increase in the unemployment rate. If we adjust for seasonality, there were over 21,000 more unemployed individuals in September compared to pre-pandemic levels in February, which represents an almost doubling of the number of unemployed individuals. Moving on to the rental market and some of the trends that we're seeing there. We'll start with the rental apartment universe, and we can see that there's been significant growth in the rental apartment universe over the last several years. And this is in part from an increase in the number of rental apartment completions, so newly completed rental apartment units. Over the previous 5 years, between 2015 and 2019, there were 6,300 new rental apartment units completed, which helped to boost the apartment universe. In Winnipeg, we tend to see a higher universe in that 1-bedroom and 2-bedroom unit types, where 3 or more bedrooms have a smaller universe and tend to see smaller demand, which is reflected in higher vacancy rates for these unit types. Looking at the apartment vacancy rate in the Winnipeg CMA, we can see that it's been hovering about that 3% for despite all the new increase in rental construction that we've seen. And this is in part because we continue to see relatively stable and strong demand in Winnipeg, which is helping keep that vacancy rate around that 3%. However, the COVID-19 pandemic is expected to have an impact on the rental market, but the magnitude is unclear. As I mentioned, we'll likely see reduced migration flows on both the interprovincial and the international side, which will impact rental demand. As well, we've seen challenges in employment for the youth, so the population aged 15 to 24, which tends to be a cohort that produces strong rental demand. As well, if we look at students, tend to be a source of rental demand as well. And with a lot of universities going online, we could see this impact the rental market. Looking at the average apartment rent in Winnipeg, in 2019, it was just under $1,100. And depending on what happens with the vacancy rate in the rental market overall, we're likely to see an impact on average rent, whether that be landlords having to create rental incentives in order to stimulate demand. However, it's important to note that the average rent in Winnipeg is affected by rent controls that the province of Manitoba has. So for example, in 2020, the maximum rent increase was 2.4%, and it'll be 1.6% in 2021. So moving on to the resale market and what we're seeing happening here. We'll start with the Winnipeg average MLS price, and we've seen that there's been price growth in the Winnipeg CMA since the year 2000. However, in 2019, while the average MLS price increased, it was a small increase, increasing only 0.5% compared to 2018. And we saw relatively similar changes in sales and new listings, which caused the average MLS price to post moderate increases. However, looking at what we're seeing in 2020 with regards to the COVID-19 pandemic, we're seeing low interest rates and pent-up demand from springtime shutdowns have fueled activity in the latter half of the year. As of the third quarter of 2020, the average MLS price was just over $325,000, an increase of 9.2% compared to the same time period last year. So if we look at the house price index and house prices among different types of housing in Winnipeg, we've seen an uptick in prices in all of these housing types, however, varying depending on which what we're looking at. So we saw single detached houses have the largest year-over-year increase at 6.8% in the third quarter. And this was compared to an increase of only 0.5% in apartment units. But as I mentioned, single detached units are typically the most popular type of units sold in the resale market. So we do see some strong demand there. And in the condominium apartment side, on the resale market, we're seeing some of the same challenges that we've seen in the new home market with regards to oversupply. So this oversupply has been putting some price challenges and downwards pressure on prices and limiting price growth overall for apartment units. So here we have the sales to new listings ratio, and we use this as a measure of market balance. We can see that the COVID-19 pandemic is putting some upwards pressure on the seasonally adjusted sales to new listings ratio. In 2020 Q2 and Q3, we see the ratio starting to increase. And this is primarily from increased resale market activity. We've seen more buyers participating in the market, while new listings have not necessarily kept pace. The rebound in sales has exceeded that of new listings, which is causing some of the upwards movement in prices. If we look at by the numbers in the third quarter of 2020, the seasonally adjusted sales were up 11.2%, and this was compared to only 5.9% for new listings. Much of the demand for new housing reflects individuals who would have purchased in the typically busy spring market, but the pandemic has pushed this into the latter part of the year. However, it's too early to say where the sales to new listings ratio is going to go. We'll continue to monitor the impacts of the COVID-19 pandemic on the resale market going forward. So looking at the new home market and some of the trends that we're seeing in new housing construction, we'll start by looking at the Winnipeg CMA single-detached starts. And in the third quarter of 2020, single-detached starts reached 412 units, and this was a decrease on a year-over-year basis, as well as year-to-date, we've seen a slowdown in single-detached starts by about 8% compared to the same time period last year. We are seeing some new demand for single detached starts, so people may be taking advantage of those low interest rates and moving up, and this has posted some positives for single detached starts. However, going forwards, fundamental factors are still weak in Winnipeg compared to pre-pandemic levels, so we'll expect this to impact the level of new construction going forwards. Now, if we look at multifamily starts, so here we have condominium and rental starts, and we can see that there's been a significant switch from condominium construction to rental market construction over the previous quarters. Since the end of 2018, we've seen rental construction outpace that of condominium construction. And there are a couple things contributing to this. So we've seen that low vacancy rate in Winnipeg, around 3%, which is signaling new rental demand. And as well, there's been some challenges in the condominium apartment side of the market. We have been detecting overbuilding in recent quarters, which has contributed to a slowdown in new starts of that type. If we look at year-to-date starts, rental starts were down 4% year-to-date, where condominium starts were down 42%. So rental starts reached 1,730 units as of September 2020, and this is compared to only 361 condominium starts. So a significant change between multifamily types. So if you look at housing starts outside of the capital of of Manitoba, we can see that there doesn't tend to be the same new construction in these areas as well. And as we saw before, we don't see the same population growth in these smaller centers as we do in Winnipeg. So this translates into lower housing starts for these areas. When in these areas, we do tend to see more housing starts on the home ownership side rather than the rental side. And there's a couple things that are impacting this. We see, immigrants, as I mentioned, are a strong source of rental demand, and we tend to see new immigrants first land in Winnipeg before moving to a different area of the province. So, less rental demand coming from new immigrants in these smaller centers, as well. If we look at the student population, aside from Brandon, these centers don't really have large universities, so we wouldn't expect to see the same rental demand from students in these areas. So looking at the Winnipeg CMA, the inventory of completed and unsold units, we've seen that inventory levels have been trending lower for several quarters now, and they're more in line with levels we've seen when there hasn't been overbuilding in Winnipeg. So in the third quarter of 2020, total units in inventory were 442, which was a decrease of nearly a third compared to the same time period last year. And it's also the lowest level of units in inventories that we've seen since the third quarter of 2017. There was a significant drop in condominium apartment units in inventory, which fell 43% over the same time period, while single detached units decreased nearly 25%. So some of the reasons that behind these decreases is on the single detached side, we saw an increase in the number of absorbed units, so more demand for single detached units. So this put downwards pressure on the inventory levels. And on the condominium side, that significant slowdown in new construction that we've seen for condominiums has translated into a slowdown in newly completed units, which has put downwards pressure on inventory levels. For condominium units, we saw 2 consecutive quarters where there was 0 newly completed units, so putting that downwards pressure on inventory levels. If we look at the Winnipeg CMA homes under construction by housing type, we can see that the apartment units make up the largest proportion of units under construction. And this is a trend that we've seen over the last several years in Winnipeg. In the third quarter of 2020, we did see a decrease in the number of units under construction, 7.5% on a year-over-year basis. The largest decrease occurred among single detached units at 20%, compared to apartment units at 5%. There were just over 5,400 units under construction in the third quarter, and the majority of these, as I said, were apartment units at 75% of total units under construction, followed by single detached units at 17%. So if we look at the homes under construction by type, so whether homeowner, condominium, or rental, you can see there's that growth in the rental units under construction over the last little while. We've seen since the third quarter of 2018 that rental units have outpaced that of condominium units under construction, while that homeowner, those based for the homeownership market are relatively stable, or we don't see the same sort of growth in those levels. We did see decreases on a year-over-year basis in rental apartment units under construction, as well as condominium apartment units under construction. And if we look at the apartment units under construction in the third quarter of 2020, 65% of these were aimed for the rental market compared to 35% for the condominium market. Look at the Winnipeg CMA year-to-date housing starts. The majority of housing starts are on that multifamily side, on the apartment, row, and semi-detached units. And this is a trend that's been occurring over the last several years in Winnipeg. We have seen a slowdown in new housing construction year-to-date at 12% compared to the same time period last year. And as we saw, this is happening on both the single-detached and the multifamily side. And again, those rental apartment units are making up the largest proportion of apartment units started this year. And we've seen considerable rental construction in both East and West Kildonan, as well as Fort Rouge and St. Boniface. If we look at units aimed for the home ownership side, so single detached units as well as condominium apartment units, we've seen significant construction in the Fort Garry survey zone, which includes the Bridgewater neighborhoods, and we've seen a lot of new construction coming out of these areas over the last several years. As well for single detached homes, we're seeing a lot of new construction happening outside of the city of Winnipeg. So in those suburb areas, there's been significant growth in smaller areas such as Oak Bluff, LaSalle, and Niverville as these centers start to grow and create housing demand for those families looking to relocate outside of the city. So, looking at the Winnipeg Housing Market Assessment, this was released in September 2020 and is based on the second quarter of 2020 data, which would be when we started to see the impacts of the COVID-19 pandemic. So, during this assessment period, we saw declining resale market activity, which led to low evidence of both overheating and price acceleration. And those weakened fundamentals that we saw, so lower employment growth, higher unemployment rate, contributed to a low degree of vulnerability with regards to overvaluation. For overbuilding, while we have seen a significant slowdown in the inventory of newly completed and unabsorbed units, and it actually was below the threshold for the first time in the September 2020 release. So we'll watch this going forward, and we would expect that as these inventory levels continue to improve, overbuilding will improve in the city as well. When we look at the vacancy rate, it was below the threshold, which would signal low evidence of overbuilding in the rental market. However, we will likely see an impact on this from the COVID-19 pandemic, so we'll be closely monitoring this going forwards. The next release we'll have for the HMA will be at the end of December, and this will look at the third quarter of 2020 data. So more information on how the COVID-19 pandemic is affecting the housing market assessment. So thank you for taking the time to listen to this webinar today. I have my information listed here if you have any further questions or would like to know anything else about what's happening in the Manitoba and Winnipeg housing markets. Thanks and have a great day.